It has been a good day for the Indian rupee, and to talk more about that, let's get on board Upasana Bhardwaj. She's economist and Western Bank, and she joins us live on the show. Upasana, hi. Nearly more than 0.25% of gains coming in for the Indian rupee, and the reaction perhaps is coming into the trade data. But then again, we are awaiting the IIP and the CPI numbers tomorrow. Between all of these numbers, how do you read the rupee impact?
Well, Manisha, I would expect rupee to continue to trade fairly range-bound in the near term, with not much of reaction coming from IIP numbers at least, because typically markets tend to ignore the IIP numbers. What is more important in terms of policy making, decision making is now the CPI number, and definitely markets would be closely watching out for the CPI numbers. And any number which would be delivering sub 9%, I think that should be definitely positive for rupee as well.
So how are you looking at the impact coming in from that one, Upasana? And two, of course, it's the Yellen first Congress testimony today in the evening, and most of the asset classes ahead of that seem to be jittery, with, of course, the exception of gold and silver prices running up. What impact are you looking at that for the currency?
Firstly, Manisha, I do not really expect Yellen to announce anything significant or provide any direction, any extra information. That is what I mean. So I would not really expect too much of a response to Yellen's speech. But yes, because ahead of her speech, there is a lot of jitteriness. In case there is any guidance which could be slightly more hawkish, because recently whatever data has been coming out, barring some of the hiccups that have been there, we have seen prospects of the US economy improve, as a result of which, if there is any hawkishness, that could become a deterrent for the risky assets, definitely.
Vijay, on the charts, how is the rupee looking now? Because as Upasana is pointing out, and as you have been saying as well, the rupee continues to be in a very narrow range, hasn't broken 62 or 63 for quite a while now.
Absolutely, Manisha. There are two thresholds that I would watch out for as a trader: 61.65 to 61.80 in case the rupee is to appreciate, and 63.25 in case the rupee is to depreciate. I think a move beyond these two parameters is what will set the ball rolling for traders to build aggressive positions. Till then, it's likely to be a very frustrating range-bound period where very small moves will be the order of the day. It's as if the market is witnessing every trader looking over his shoulder and wanting the other guy to take the initiative to push prices higher or lower. And when there is a kind of a sitting on the fence attitude, I think markets can be fairly lackluster for traders. This is a scenario that I expect to continue at least till the vote on account. Not that the vote on account is likely to spring any major surprise, but everybody is waiting and watching around.
Upasana, would you also say that the rupee narrow range perhaps is a result of a very vigilant RBI as well?
Yes, definitely, Manisha. I would say RBI has definitely been very vigilant. If you see from February onwards, the need for the oil demand, oil-related dollar demand that has to be repaid back to the RBI, the oil window which was opened earlier, by Feb end onwards, oilers have to repay back that kind of dollars. So whenever there is any excess amount of custodian flows, you are seeing that being offset by intervention by RBI on the other side, or other nationalized banks buying dollars on the other side. So somewhere there is an offsetting that is happening, and that is definitely keeping the range intact.
Okay, so those are the lots of factors that the rupee is watching out for in the coming days as well. With that, Upasana and Vijay, we'll let you go. Thank you so much for joining us with your sense on the currency and breaking it down all of those fundamentals for us.